All right, everybody. This is Prabhat and Avinash. We're going to be going through our Berkshire letters. He's enjoying his amazing, tasty coffee. Last time we did the 1965, our first letter. Today we'll be doing No Surprise 1966. And I will hand it off to Avinash and he will tell us, what was going on around that time.
Okay, so 1966. So Buffett last year was 35 when they first started to publish this. So now he's 36. So in 1990, 1966. So stuff that's ongoing. There's the Cold War, and then you also have um, um, the space race is going on, and the Vietnam War is going on. And so, still, Lyndon B. Johnson's still president. So this is his
Mm,
second year from Texas. And so, what actually happened in 1966? So, um, in January 2nd, the New York State Transit strike happened. I don't know if you knew that, but there was a
mm,
strike by public transport workers in New York City. So that happened. And then January 12th, Lyndon B. Johnson said that um, they should stay in Vietnam. So remember, the Vietnam War is going on, right? So they're saying that they'll stay in Vietnam until the communist aggression has ended. And
Wait,
so
when was the Vietnam War? What were the years for that?
1964 to 1973.
Oh wow.
Yeah,
Okay.
yeah,
Okay. So it's really like we're in the middle of it.
yep. And so so on 18th, so 12th he gave the order, and then on the 18th, about 8,000 U.S. soldiers land in South Vietnam, and then the U.S. troops are now 190,000 people in Vietnam. So a whole lot. And then
And there was a big, anti-war movement in the college campuses, right? I mean, everybody
yep,
was like, you know, peaceful protests and walkouts and whatever.
yeah, yeah, that's right. And of course, Buffett, he's so steadfast. He's got his own problems. He's not worrying about any of this stuff. I'm sure he's seeing it in the news and stuff, but this is kind of
Yeah.
what would be on his radar.
And I'm
So,
sure his wife is, because I think his wife was like very liberal, like was
yep,
routinely in San Francisco or in like the, California scene and very, very socially liberal and
yep.
active in that circle.
Yep. And I mean, where do you think Warren Buffett would be here? He'd be in his room, just reading.
Oh,
Uh,
absolutely.
probably, yeah. Probably not wanting to get out of his room. So January 19th, Indira Gandhi is elected Prime Minister of the Prime Minister of India. So she's
Oh.
she's sworn in 24th. So that's also going on. And so this was interesting. So in April 13th, Lyndon Johnson signs this Uniform Time Act. So this is
Hmm.
dealing with daylight savings time. So he promotes the adoption and observance of the uniform time within the standard time zones, whatever that means. I didn't know that they didn't follow daylight savings before that, but I guess he was the one who initiated it. And you might be interested in this one. I found this fact. April 21st, 1966, an artificial heart is installed in the chest of Marcel de Ruyter in Houston, Texas hospital. So uh,
Was it like DeBakey or somebody doing it?
I don't know, but I mean, since not only are you a doctor, but you're in Texas, this is where it happened. Artificial heart.
Interesting. Interesting.
So May 16th, in New York City, Dr. Martin Luther King makes his first speech on the Vietnam War. Do you know if he was opposed to it, or was he? I mean, he must be opposed, I would think, right?
I I felt like ideologically, he was probably in the same circle as people who are opposed to it.
Yeah,
Like spread love, not war, kind of thing. I don't know why he would be pro-war,
yep,
but I still feel like his fundamental,
yeah,
priority was, African American rights and
yep,
just civil rights in America, and
yep.
not necessarily foreign policy.
That's right. And in pop culture, June 20th, Bob Dylan's album "Blonde on Blonde" is released in the United
Hmm.
States. So this kind of revolution is going on, and this is interesting. So on September 13th, the Cultural Revolution in China. So China is like way back in the boondocks right now, right? So like this
Yeah.
is we don't even think about China, but the Cultural Revolution in China. There's clashes between the Chinese Communist Party and the Red Guards, as reported by TASS in the Soviet Union. So the Cultural Revolution is just starting to happen. I think, if I'm reading that correctly.
I know it happened in the 1960s, and I was kind of trying to figure out, from China point of view,
Yeah,
particularly what was going on.
yeah.
I don't even know what Red Guard is. Do you know what that was?
No, no. I'm guessing this is to do with the Soviet Union. Maybe um, something to do with that. I would think
I think
so.
it's like it's a cultural revolution. I think this whole period, like I kind of loosely know it in like the 60s. They finally did away with um, traditions, quote unquote, of China, and they kind of embraced more uh, severe communism.
Hmm.
Uh, and I think the main driver behind this was the country and the people were feeling that they were kind of getting left behind in the
Hmm.
world,
Hmm.
and the current status quo wasn't working for them. Poverty wasn't getting better. Other nations, including Japan, were having all this growth post World War II,
Hmm.
and they felt like something needed to change.
Hmm.
So, and they felt like the traditional cultural roots of the country that included the elites who had the money
Hmm.
were kind of self-serving, and they weren't really taking the country in a
Positive.
positive direction where there'll be common prosperity, that the poor will see that the wealth that is or the poor won't be able to take part in the world
Hmm.
growth.
Hmm.
Hence that was, I think, the root of unrest.
Hmm. Okay, that makes sense. And then, so in October, the United States Department of Transportation, that was started by Lyndon B. Johnson. I didn't know that.
I think he built all the highways, right? I think that's what I remember. Like he did.
Oh,
He spent a lot of money in on the highway structure of the country,
oh,
and kind
really?
of took us away from the railways and into the roads.
Ah, okay, interesting. But I would think that the Department of Transportation would be way after the highway thing, right? I thought the highway thing was like Great Deal and all this stuff. Maybe I'm wrong. I don't know.
Maybe I mean I thought that was more like dams and but still I'm sure like all this there were multiple infrastructure projects
Yeah,
by the government.
yeah. So sorry to end it on a sad note, but December 15th, 1966, Walt Disney dies while producing The Jungle Book, which was the last animated feature under his personal supervision.
He
So
died that long ago?
that long ago,
1966.
when
Wow.
Buffett was 36. And in fact, Buffett, correct me if I'm wrong, was invested in Disney for a short while, and then he got out of it. Isn't that right?
Yeah, I don't remember when he
Yeah,
was invested. I mean, not this early. Like, I
yeah,
don't think he has bought Disney seriously here.
yeah,
He does kind of, I mean, he has this long love affair with Cap City ABC and I think that's in the 90s, and we'll get to it eventually.
yeah,
And that gets, later acquired by Disney.
yeah.
But
And
it's interesting.
yeah, that's I'm sure we'll get to it. Hopefully, it's in one of his letters. But I thought maybe just to connect it to people that we know today. People who were born in 1966. There we have Halle Berry, we have Mike Tyson, Janet Jackson, Selma Hayek, and Adam Sandler. All of them born
Wow.
1966. Yeah.
When were all the tech leaders like Bill Gates and Steve Jobs? Weren't they all born around the same time? When was that?
I don't know when they were born. That's a good question.
Because I felt like they were. I mean, I remember a five in the year's name.
Um,
Uh,
so he was
oh,
born in
1955. They were all
1955. Okay.
55. So
Okay.
kind of when the Berkshire Hathaway merger happened.
That's right. That's right. So yeah. So yeah. I mean, it sounds
Steve
like
Jobs was also born 1955. So this is what I remember from like I
yeah.
think the Outliers, the
That's
book
right.
where all these people were kind of born about the same time.
Yeah. 1955. So tech isn't even in the scene yet here.
Yeah, yeah,
Yeah.
yeah.
Um, okay. Very cool. So that's kind of what was going on in 1966. We can um, maybe jump to the letter.
Yeah, let's jump to the letter.
Okay.
Just to kind of recap 1965. I mean, They had a really good year based on earnings. This was the gist of it, and they had that's some restructuring that closed some plants
That's
that
right.
were underperforming, turned some into the warehouse. So they're
Yeah.
already seeing some very depreciated assets that they had to probably write off. But let's see how that evolves because
Yeah.
it was a good year, 1965 for Berkshire Hathaway.
Yeah. And remember Mr. Seabury Stanton? He pretty much was fired, and
Oh yeah, I
now
mean he resigned.
he
So yeah,
resigned, quote
so kind of
unquote.
Buffett had taken a a more active role.
Right. So
Uh,
this is, I guess, one of the first years where he played an active role in Berkshire Hathaway.
correct, correct. All right, exciting, exciting.
Nice.
So here we go. So letters written on December 2nd, 1966. And it goes like this. For your information, we have highlighted the financial information for fiscal 1966 in comparison to the 5 preceding years on the facing page. In this letter, we will discuss in some detail the following areas. Number one, operating conditions in 1966. Number two, survey of operations from 1961 to 1966. Number three, maintenance of financial conditions. And number four is dividends. And this is going to be a little bit of a longer letter. By longer, I mean about 4 or 5 pages.
Yeah.
So should be fun. All right,
Yep.
here we go. Number one, operating conditions in 1966. Sales. Although total sales of about $50 million were very close to last year's, there were significant changes in the product mix. The synthetic division sales dropped in dollar volume, but this was offset by a corresponding increase in home fabric sales. The box loom division sales showed some gain, but this was offset by a drop in sales of our King Philip D division. The sales picture for the last half of 1966 was one of generally depressed markets. Heavy imports of yarn dyed goods plus a change in styling trends caused loss of sales and depressed prices in our boxwood division. Overproduction of acetate fabrics plus importation of nylon fabrics brought more looms into competition with us in synthetic division. The combination of imports and increased domestic production depressed prices of plain polyester cotton blends. We estimate that this development will cause looms to swing back onto cotton goods and thereby adversely affect our sales position on lawns woven at King Philip D division. The negative factors which prevailed in the last quarter of our 1966 fiscal year contributed to our decision to avoid inventory buildup by shutting down boxloom and synthetic divisions in New Bedford for the week of October 9th, 1966. Inasmuch as the textile market has not, at this writing, shifted to a more active level, further cutbacks in production may be necessary to avoid inventory buildup. All right, so let's summarize that much.
Hmm.
Um, Sounds like they are seeing two kind of things happen. One is they're seeing shift in consumer taste.
Hmm.
Um, their synthetic division is going down, but their home fabric sales are going up, and they're also seeing more competition. More businesses are kind of making the type of material that they're making.
Mm. Interesting. Yeah, and what's interesting about this is that he's not blaming any external factors here. Like think about everything that's going on in 1966. There could be so many things he could blame sales on. Oh, sorry, we have issues with, all these things because of these global macro effects. But he's
Yeah,
really kind of talking about, this is our problem and this is why we're seeing it. And he's pretty upfront, shutting down this, we want to avoid inventory buildup, so we're going to be shutting down. There might be new shutdowns that might happen, to
yeah. I
further
mean,
cut back on
he's
production.
in. I mean, he's operating. He's the chief
Yeah.
operating officer. Almost feels sounds like it. Another thing we can do is try to figure out what the market is doing, like S&P 500 for that year.
Mm,
Like 1966, what was the rate of return for S&P 500? What were the interest rates like? That may give us a more financial kind of macro level
yeah,
insight into what Buffett was dealing with.
yeah,
Not, I don't think he cares about macro, but
yeah.
what else can
So
we? Yeah.
actually, so for 1965, I think I have the numbers here. So the
Oh,
return was 2.12%.
for the S&P, for the
Yeah,
general market. Oh,
yeah.
that was 65. You said 66.
Oh, you know what? This is broken down by month, so I can't really give you
Okay.
the full one. Let me see if I can grab the full one somewhere, just for the year. Uh, okay, here we go. Well, I have the price, but I don't have the rate.
I think there wasn't much movement actually.
Yeah, so I'm seeing it here. So this is
Maybe
before.
slightly negative.
Yeah, this is before Black Monday. So maybe I could post it here with for you. So um, this is a pretty interesting chart here. So S&P 500 historically, you know, Black Tuesday had happened in the 1930s, and in 1960s, it's not super. It's kind of flat. I would say.
Okay.
Yeah,
Can you show it on the screen?
yeah. Let me know if you can see this. Can you see it?
Yes, yes. All
Okay,
right.
so
Mm,
we are at 1966, so we're like right here. And
yep.
so about 30 years ago, we had um, Black Tuesday, kind of huge crash, and then we're starting to see it kind of rise up, but there's no real. It kind of seems like it's somewhat flat, right? Even for 20
Yeah.
years, it's kind of flat. So kind of stagflation is kind of the period that we're looking at.
Yeah. Yeah. And I guess there's some kind of these divots and stuff. Okay.
Yeah, yeah,
Okay.
yep,
All right. So and going back to the letters, so Buffett is going to prepare to make these cutbacks in production. He's also trying to be mindful of their inventories. He doesn't necessarily want to have useless inventory build up
yeah,
that's kind of wasted capital. I mean, you're already seeing signs of, he's trying to be a smart capital allocator and not just hoping that, oh, we'll just build our inventories and hopefully the market will accept and the interest in the products will come back. And he's
that's right.
seeing that this is a very shifting, very fast-paced change of a business. And
Yeah,
Buffett does not like change as an investor. He likes, zero capex and
yep,
there's zero R&D. That's his perfect business where you just, Coca-Cola, you just make the same thing over and over again and you don't have to do anything.
yeah. And so this is as active as we'll see Warren Buffett in the business probably ever.
Hopefully,
Right.
yeah,
Yeah,
yeah.
yeah.
I mean, but he's already. I think maybe because of this,
Mm-hmm.
he understands why he needs to go for businesses where change
Anyone.
is less
Right. Yeah.
rather than more.
Yep. Yep.
So, and this, I mean, he's still young. He's in 30s, and he has this very personal experience.
Yep. That's right. Yep.
And okay, so next one, new products. The growth of our home fabric division over the past few years is, in large part, due to our development of both new products and new application of old products. In the past year, we have increased our expenditures for development so as to provide fabrics that will yield more stable prices and volume. So they're kind of realizing that the home fabric business is growing. They're trying to make new products and kind of trying to stay competitive in that market.
Mm-hmm.
It was labor. In early 1966, we signed a contract with the Textile Workers Union of America, AFL-CIO, for 3 years ending in April 15, 1969. The contract covers wages and benefits with no reopening clause. So, you know,
Interesting.
they're worker unions happening, and then you're not just battling changing consumer behavior and competition, but then I mean, there's no robotics here, right? I mean, you
Mm-hmm.
don't have cheap Asian labor. You have American people working, and then they have unions, and you have to
Mm-hmm.
please them as well. So it's
Mm-hmm.
just a lot of balancing.
So, just a quick question on labor unions. I'm not too versed on that, but is that kind of like you pay them off, and then you're saying, hey, look, this is the minimum I can pay. The labor unions don't get mad at me or don't go on strikes. Is that kind of how it
Well,
works?
they have demand. They go on strikes when they're unhappy.
Uh huh.
They either want, better, safer, shorter work days, or they want increased compensation or benefits of some sort.
Uh huh.
So, they're basically. I think this one probably is wage related because I don't know textile mills, unless you're running like a sweatshop.
Yeah.
I think here it tells you it covers wages and benefits with no reopening clause. So I mean they have made a contract that maybe they get incremental increase in their wages for the next 2 3 years,
Mm-hmm.
and ultimately in a union situation, if there's a union leader, who's doing the negotiation part of the workers, but if ultimately you don't want to have your demands so egregious that and you be so adamant that the business can't pay you and the
Mm-hmm.
business is shut down because that's a lose-lose situation.
Mm-hmm.
If labor unions and the CEO can't reach an agreement, then they're out of a job and the business is out of
Mm-hmm.
the business.
Yeah. Yeah. Makes sense. Okay. Okay.
So it looks like that this kind of worked out or for a few years.
Yeah.
Plant and equipment. We have spent approximately $1 million for purchase and installation of new equipment in order to lower costs, improve quality, and increase our manufacturing flexibility. During fiscal 1966, we disposed of the remainder of our unused property. So they're getting rid of the property they don't need,
Mm-hmm.
getting the cash, plus adding more cash to that, and buying more new equipment to increase their productivity, lower their costs, so they can you know so they can make boost their profit. At
Mm-hmm.
least that's the hope.
Yep.
So here we have capex $1 million. I mean that's not a small amount.
Yeah. Yeah.
Income tax payments, all but a small portion of our tax carry forward has been used as of the end of fiscal 1966. We therefore will incur income tax liability with respect to future earnings. So here, he tells them that we had this loss a few years ago. Because of the loss, we have been able to show that our earnings are less and we were paying less taxes.
Mm-hmm.
And we have kind of reached the end of it. So going forward, uh, we have to pay taxes and our profits will be lower. So prepare for that.
Mm-hmm.
And we're only like a page and a half into the letter, and we already kind of have a really good idea of from operations high
Yeah.
level point of view what's going on.
Right.
And easy to understand language. I mean, some of this lingo maybe is kind of textile, like home fabrics, textile looms. I mean, some
Mm-hmm.
of that may not be in the fifth grader level, but I mean, I don't have a financial background, and overall kind of makes sense so far.
Yeah. One thing I wanted to point out before we go to number two, which is the survey of operations. What's awesome about this is that just by these sections, I guess we can kind of pierce into Buffett's mind as to what he considers as just the operating conditions of a business. So, what he really considers as like how to understand a business, just for his own textile company, would be sales. That's the most important thing. New products. That's the second most important thing, I guess. Labor and then plant and equipment. So and income tax. So really, these are the ways. So we kind of get a good picture of how the business is operating just by looking at those
I mean, this
four
is
things.
basically broke down of the income statement, right? You have sales
Yes.
or revenue at the top,
Yep.
then you have new projects that kind of tells you maybe it's just the R&D.
Yeah.
You got labor cost and then plant development costs and income tax
Yeah.
payments. I mean,
Right.
it's just
It's yeah. It just summarized. It's awesome.
very
Yeah.
systematic
Yeah.
and common sense.
Yeah.
All right. So next one, we have survey of operations, and it kind of goes into the preceding 5 years, 1960 to 1966. As one might expect in a business as highly cyclical as a textile business, the past decade for Berkshire Hathaway has been a recurring story of a period of earnings followed by a period of relatively heavy losses. The past year has been a significant one in this history because not only was 1966 a year of profitable operations, but also it witnessed the restoration of our financial strength to the level that existed at the end of 1960. You will recall that the heavy losses of the years 1957 to 1958 had not yet been fully recouped by the profitable operations of the years 1959 to 1960, when our business was again hit with a 3 year period of loss operations. So just telling you, this is they were highly cyclical. We had heavy losses in the late 50s,
Mm-hmm.
and we had a lot of highly profitable years, but we still kind of didn't get back on the road on the right tracks. That the cycle went down again.
Right.
So it's just really hard to stay above water.
Yeah. So the two kind of main things is we're still not out of the hole yet, and then I didn't realize. I mean, it completely makes sense, of course, that any textile business would probably be cyclical, but I would think since this is written in December, um, I would think that the if I was to guess, the cyclical period would be Christmas, December time. Q4 would be the most sales for the textile business. Would you agree?
Yeah, possibly. I mean, I don't necessarily understand if or I'm not going to assume that our consumer behavior today, which is so heavy on the holidays, it's what it was in that time.
Mm-hmm.
It may be, but I do feel like our consumer behavior, maybe driven from a more recent ad campaigns that
Mm.
tell us, hey, we do need to spend a lot of money in
Yeah.
the around the Christmas time. But I
Yeah.
may be wrong. Maybe fabrics were bought during the holiday season.
Yeah, yeah, I would think so. Just because, I mean, even though, yeah, we might be buying more now, it's probably expected that during Christmas time people would be buying gifts and stuff like
Yeah.
that, holiday time, so you'll have free
But I can
time
also
to.
see summer, because a lot of the
Yeah,
America, like I mean, this is Northeast basically, and maybe summer comes, you buy new dresses, you do home renovations, you get new curtains, and I
yeah,
don't know what else.
yeah,
But
yeah, makes
but I
sense.
mean, he does it year round. I mean, he doesn't. This is not a quarterly report; it's a year
Yeah,
to year comparison. So,
yeah, yep. Okay.
um, not only did our financial condition in these years suffer from the inroads created by these losses, but it also had to absorb the impact of our heavy capital expenditure program of the early 1960s. So yeah, so I mean, kind of you're on this treadmill. You're not really going anywhere. You in 1960s they got losses. So what do? You're trying to become competitive again. How do you do that? You take loans. You get better machine, and you try to overcome your competitors,
Mm,
and it works till it doesn't work anymore, and then and then you're kind of back in losses again.
mm-hmm.
The following table summarizes the change in the net worth position of Berkshire Hathaway during the past 6 years. So reading this little table looks like net worth. in 1960 for Berkshire was about $38 million.
Mm-hmm.
Net earnings from 1961 to 1966, this is kind of cumulative, was about $40,000. This is net earning. This is after they've kind of subtracted all the capex that was depreciated to zero, or they sold.
Mm-hmm.
So the net earnings from existing in those 5 years, they got about $40,000.
Mm-hmm.
And this is also looks like subtracting dividends. So those were retained earnings for the business, and then they gave about $1.3 million in dividends.
Mm-hmm.
Um, so they say that there's majority of their earnings were given out in dividend. Uh,
Wait a second. The majority of their earnings was given out as dividends.
Correct, over 1961 to 1966, which brought their net worth to about 36.6 million, down from 38 million
I see. Okay.
of
So
the Berkshire enterprise, because a lot of the value has been given back to shareholders.
okay. So about $1 million given back to shareholders. So your total, I guess, take home would be 36 million, or would that be the ticker? I mean, would that be like the the car sticker price?
Yeah, yeah. I
Okay.
mean, you can just, yeah, if you were going to buy Berkshire Hathaway, I mean, this is kind of what the value is,
Mm,
including from the value of the real estate, the machinery, the cash.
mm.
I mean, this thing about 36 is left,
Wow.
36.6 million.
Okay.
And then they also do a lot of share repurchases.
That's
So
interesting.
from 1961 to 1966. I mean, again, Buffett is not really part of the management for most of it, and they about 7 million is spent on shares repurchases,
Mm-hmm.
which brings down the net worth to about 29 million.
Okay.
When you buy shares, you take your dollar amount, you buy those shares, and then you can destroy those shares to kind of as a means of increasing the value of shares held by shareholders.
Okay, so let me try to understand. So, what would actually be the sticker price value for Berkshire Hathaway? Would it be 36.5 million or would it be 29.5 million?
Well, ultimately, it's 29 now.
29. But
First, it was
even
telling
though
you
they
it started with 30.
repurchased,
Yeah, yeah. It started
huh?
with 38 million,
Yeah,
and then it tells you kind of what they spent about $1.3 million in dividends.
yeah,
Then they spent about $7 million in stock buybacks,
yep.
and then they have about $40,000 of net earnings remaining
Hmm.
that was not given back to the shareholder.
Okay, okay,
That was kind of kept with the enterprise.
okay. Got it.
So
Yep.
you will note that while dividends exceeded net earnings during the 6 years period, the major reason for the 22% decrease in net worth has been the repurchase of the company of its own stock, pursuant to a program whereby the company's outstanding shares have been reduced to about a million shares, a 37% reduction compared with the outstanding on October 1, 1960. The decrease in outstanding shares has been appropriate considering the reduction in scale of the company's operations due to the closing of unprofitable mills.
Mm,
Interesting. So Buffett is actually saying this purchase, the share buyback, was okay because the, the company's operations have been shrinking.
mm-hmm,
One caveat here is oftentimes dying businesses
mm-hmm.
aggressively buy back shares, because what that does, it keeps your share price plateauing as opposed to declining.
So is
So
that like it was his reason to? By the way, I'm hearing like a repetitive sound from your end. I don't know what that
Okay,
means.
okay, okay, okay.
Yeah, that's perfect. Okay, so what would be the reason why Buffett is buying back shares of Berkshire Hathaway right now? Because the company is already doing bad. You would think all the money that you would need you should put back into the business. What would be the reason?
Well, let's see. I think there are two more paragraphs. Let's see if he answers this.
Okay.
Because I would think you don't want to be buying back shares, would be my first instinct.
Yeah.
But let's
Right.
see. The benefit to the present stockholders of this program of share repurchase is indicated in part by the fact that net worth per share of the company's outstanding common stock on October 1, 1966 was about $29 compared with $23 6 years previously. In the year ended October 1, 1960, our sales totaled $62 million, whereas in 1966, they totaled $49 million, a decrease of approximately 21%. This corresponds to the 22% decrease in total net worth. The fact that the company is now achieving approximately the same net worth turnover as existed at the beginning of the 6 year period is again some indication of the restoration of its strength.
Mm.
Okay, so it he acknowledges, I think, here that the net worth
Mm-hmm.
has kind of decreased with operations,
Mm-hmm.
kind of in a similar strength. So it's probably whatever decisions made by management weren't inappropriate. Sounds like
Mm-hmm.
yes, net worth has shrunk, so has the business, and so I mean the stock price is up. I have
Yeah.
a feeling I don't think he's fully convinced. I mean that I don't think he would have bought back shares. I don't, but I think he's also saying that it's not terrible that the shares were bought back. Is my
Well, yeah,
takeaway.
yeah. I understood it kind of similarly, but I think he wanted to buy back his shares. The reason is because he's saying, you know, we're kind of having very similar net worth in terms of turnover compared to 19 let's see, 1960 to 1966. So 6 years ago, we were earning just as much as we are now. So, I think the company value should be very similar. And so let me repurchase back the price. I mean, repurchase back some of the stock so
Well,
that,
you only repurchase shares when the what the market is pricing your company is less than what how you price your company. So you only
yeah.
repurchase shares when you think the shares are actually lower than they should be in price.
And is this not the case now? Doesn't he think that
He doesn't comment on
the
that.
value of the company, I
Yeah,
guess?
yeah.
Yeah.
He just says it. He just kind of tells you, all this has been done, and it seems like it kind of makes sense. The net worth today is lower, and
Yeah.
it's lower because of these dividends and share purchases.
Yeah.
And but the business has shrunk. So I mean,
Yeah.
it's not like there was capital destroyed.
Mm-hmm.
It's still it's not unreasonable. I
Yep.
think he's indifferent about it. I think.
Okay.
So that was their survey of operations. Now we talk about maintenance of financial condition. It has always been among the goals of Berkshire Hathaway to maintain a strong financial condition. Indeed, it has been this practice that has enabled the company to survive in the light of a highly cyclical nature of its business. The present strength of the company's financial condition is demonstrated by its $23 million of working capital at 1966 October 1st. This figure is about equal to the company's working capital on October 1st, 1960. Although on a per share basis, because of the reduction number of shares through repurchasing, our working capital is now $22. I think he means per share, with compared with $14 per share 6 years ago.
Mm.
So sounds like he wants to have strong financial condition. That means he has access to capital, his working capital, which kind of means how much money you have access to in within that year to do things with is about the same. That has not shrunk,
Hmm.
which is good.
Yep.
In addition, actually, it's not just good. It's actually probably better than good because it's gonna stay the same despite the fact that business has been declining.
Right. Right.
Right. So
Yeah.
he's the fact that he's able to keep the liquidity of his assets kind of up, on the same level. That's promising.
Yeah. One quick thing to note right before you go to the next paragraph. So 6 years ago, this would be 1960. Your share, Berkshire Hathaway share, was $14.41. 6 years after, $22.76. So not even a 2x in 6 years. So just FYI for people who are like, we expect now like 10x in 3 years or 1 year. So
That's
just
true.
just keep in mind, not even a 2x. So you're probably thinking as a YOLO Bitcoin holder, you're like, what the hell? This is such a crappy company. And you're probably
Yeah.
right. Right now, it is a pretty crappy company.
Yeah. It's no
Okay.
Bitcoin for sure.
Yep.
In addition to the cyclical nature of our business, there are other reasons why a strong financial condition is advisable. As you have been advised previously, the company has been searching for suitable acquisitions within and conceivably without the textile field. So you tell you the company has been looking to purchase other businesses that are in textile or not in textile. He doesn't care.
Interesting.
Although to date none has been successfully concluded, we continue to have an active interest in such acquisitions. The present state of the money market, in which funds are virtually unobtainable for acquisition purposes, makes it imperative that we have available the liquid assets with which to consummate such acquisitions, should the hoped for opportunity present themselves. So, what he has said so far is he's looking to make acquisitions, and all this is under trying to maintain his financial condition
Mm-hmm.
and sounds like they can't really, get a loan and buy a business based, by borrowing.
Mm-hmm.
So he needs to have liquidity,
Mm-hmm.
and hence, probably one of the reasons he's sitting on so much cash equivalent or 23 million.
Right.
So he could just buy something outright.
Yeah, and interesting that he says without the textile field. So,
Yeah, yeah.
so he's probably already thinking, man, I gotta exit out of this thing. This is like ridiculous.
He's probably realizing that this is not
Sustainable,
sustainable,
right?
or there are probably better businesses that he can use as vehicles
Yep,
to generate wealth.
yep.
Okay, and present uncertainties such as war,
Mm-hmm.
tax rates, and decreased level of business activity also all combine to emphasize the continuing need for a strong financial condition. They're
Yeah.
definitely looking for a pivot.
Mm-hmm.
The second area in which substantial investment may be necessary is our fast growing home fabrics division. Home fabric sales have nearly doubled in the past 3 years. Should a corresponding increase be attained in the coming years, we may be called upon to invest up to $7 million in additional inventory and receivables.
Hmm.
So looks like they're looking to possibly invest more in the home fabrics division because that's actually growing and bringing in a lot of the money.
Mm-hmm. And so
Final,
it's kind
yeah,
of nice that he's not talking about other investments yet, even though he might be thinking about it. He's still focused on still the
yeah,
business,
yeah.
and
He's
yep,
not like screw this, liquidate
yep,
everything. I'm gonna just get the cash and dump it into no. I
yep,
mean, he's
yep,
trying to do two things at once: run
yep.
the business. I'm sure, and he has help, right? I don't know how active he is in day-to-day roles because I mean, he still has the Chase family members kind of, I think, running the business. Hopefully, so
Mm-hmm.
he
Mm-hmm.
gets to actually spend his time looking for acquisitions.
Yep.
Finally, the threat of technological change is ever present in the textile field. We have an investment of $24 million, that's about 6 million after accrued depreciation, in plant and equipment. This is an investment which the textile machinery industry is constantly striving to render obsolete. An important change at any level of our manufacturing process could require major capital expenditures at tomorrow's replacement prices. We shall continue to weigh more carefully the possible rewards and risks for any capital expenditure program. However, should we decide that it is in our best interest to make capital expenditures, we must be in a financial position to do so. Sufficient working capital should be particularly necessary if the advent of important cost cutting equipment coincided with a period of depressed textile earnings, making outside capital difficult or impossible to obtain. That's a very good paragraph. Wow.
Yeah.
Okay. Okay. So he's kind of telling you another reason where they need to have high working capital and have this liquidity available.
Mm-hmm.
Kind of ties back to the type of field they are in, which there's a lot of competition, a lot of capex is required to stay competitive.
Mm-hmm.
Just because your competition is buying expensive machinery, you basically have to. If you don't, you're going to be out of the business.
Right.
And sounds like these machines don't last that long. I don't
Mm-hmm.
think they break down, but they become obsolete by new machines that your competitors are now buying. So you kind of have to
Keep
spend,
pace.
yeah,
Yeah.
keep pace and dump this money
Mm-hmm.
in that area.
Mm-hmm.
And he's saying it's not even predictable. I
Mm-hmm.
mean, it's a year 2 year process. They don't know when they need to pivot and buy a new machine. It could be tomorrow. It could be the next year.
Yep.
And he doesn't know how much it's going to cost. I mean, a machine that they're working with that they bought 5 years ago was $1 million.
Mm-hmm.
The new machine maybe $5 million. It's not
Mm-hmm.
going to be the replacement cost of that machine is not of the original capex. It's
Mm-hmm.
on tomorrow's dollars. So whatever the new the market prices are, and that's another variable that brings in uncertainty, and
Yeah.
nobody's willing to lend them money. Looks like
Yep.
for whatever reason, so they must fund this themselves.
Yeah. And I wonder, I mean, maybe you'd know this, but I wonder if like if it's similar to the semiconductor industry in that every cyclical period you have to invest more and more and more into your factory so that you can keep pace.
Actually, yeah. So I was
Yeah.
actually thinking of the semiconductor industry, and even Apple, because Apple was sitting on all this cash that they didn't want to
Right.
give out to investors. But I assume it's a similar. I think it's a common problem
Mm-hmm.
that as a CEO you want to be in a financial situation where they can where you have the cash and you can allocate the cash better than an investor, and every investor wants that. I
Mm-hmm.
mean, no investor wants to get the money and try to figure out a new investment vehicle for that money.
Mm-hmm. Mm-hmm.
I mean, that's not ideal. You may want to do that, but
Yep.
the best bang for your buck is you buy a business that already has an amazing capital allocator,
Mm-hmm.
where you
Yeah.
can just buy it and forget it, and they will compound for you at a higher rate.
Mm-hmm. Yeah.
Where you don't have to, you can just go to the beach and chill.
Yeah.
They will do the work.
Yep.
So that's
And something to
is
keep in
what.
mind from this paragraph I thought was pretty interesting was that, you know, technology, we always think technological, threats or technological change is always to do with the tech sector. That's not true. We see here, this guy's even worried
Yeah.
in the textile industry. He's like, oh my God, these technological changes of making these products are, really killing me here. So technological
Mhm.
change, I think we can take away as one of, I guess, the main, like, um, I guess the real disruptors, even in industries which are not tech.
Yeah, I mean, I think this kind of also maybe this is how he also learns to hate tech because he's like, I don't
Right.
understand tech. I'll never invest in tech.
Right.
And maybe this is how it started. He's like, goddamn machines, this kind of making it so hard
Right.
to just retain grow your earnings and actually create wealth.
Yeah.
They're just just a black hole
Yeah.
of money that just sucks all your profits and it becomes useless for a few
Yep.
years.
Yep.
All right. It is these considerations which cause the company at year end to include in its working capital $5 million of marketable securities composed of short term municipal bonds, commercial paper, and common stock. So, what that means is he has all this, cash sitting now.
Mm-hmm.
And while he's waiting to purchase a big business, he's already started to invest it into
Mm.
bonds and some stocks so he can get some return on this. Because
Interesting.
he just doesn't want it sitting and being completely idle. So he's like,
Yeah.
let me do temporary stuff while I wait for a big fish.
So is that the case? Like, let's say Apple famously has a lot of cash on its balance sheet. So does it invest in bonds and stuff like that, or it's not in the bank? I'm thinking.
Most companies will do short term bonds, and maybe that's what he's doing short term bonds. They're
Mm-hmm.
safe, right? I mean tax
Mm-hmm.
free. He's
Mm-hmm.
also doing I don't know what a commercial paper is, but he's doing common stock.
Mm.
So he's actually buying public stocks. I don't know if it's an index fund or
Mm.
or what he's investing in, but
Mm.
he's definitely taking some risk in it. He wants to maybe he's just trying to stay ahead of inflation. I don't know.
Mm. Okay.
Because of the uncertainties in the knowing when the company may be called upon to produce substantial sums of cash and the possibility that this might not occur for a considerable period of time, your directors have felt that we should be as zealous to achieve a realistic return on this portion of our capital as we are on the other funds that are at the time invested in plant, inventories, and receivables, etc. Accordingly, it is the present intention of the directors to proceed towards the interim investment of a major portion of these funds in marketable common stocks. This should hold promise not only of greater income than can be achieved through alternative investment possibilities in the field of non equity marketable securities, but also provide us with opportunities to participate in earnings derived outside of our textile business, even if only temporarily and indirectly. Okay, okay, another great paragraph. Another great paragraph.
Awesome. Yeah.
It's like we are sitting in all this cash,
Yeah.
and clearly there are two things that we're doing it for to maybe purchase, make an acquisition or capex we may have to do,
Mm-hmm.
and we realize we don't know when this will need to happen. I mean,
Mm-hmm.
we don't know when we'll be, so what do we do in the meantime? It may not happen for a while,
Mm-hmm.
but so we need to have do something that's fairly liquid. That
Mm-hmm.
means if we need to do it, we can get our money back quickly, but also grow at the same time.
Mm-hmm. Yeah, and interestingly, he doesn't talk about putting it back into the business. He's just saying, look, this could grow into more cash.
Yeah, so we need
Yep.
to do something that we need to make an investment that's better than
Yep.
just putting it in the business,
Yep.
right? I mean, because you could dump it in the business. First, it's not going to be very liquid. If you do put it in the business, you can't
Yep.
just sell a machine as quickly as you can sell a stock.
Right.
But yes, very good point. And then he says most of this money is actually in the common stock, not bonds.
Mm-hmm.
So, so that I mean, we all know stocks generally outperform bonds. This is equity. These are businesses, and he says this way we are actually indirectly participating in other businesses because we're now exposed to their earnings,
Mm-hmm.
and hopefully these businesses are not highly cyclical, highly capex businesses that
Mm-hmm.
he's buying stocks of.
Mm-hmm. Yeah.
So
But this would be kind of risky, I guess, because if you didn't know which stocks would perform without the analysis and really carefully, meticulously kind of going through every single, I guess, balance sheet and really understanding the business, you could dwindle all your money away. Really, you could be shrinking your cash, but
Yeah,
really,
well, there are two risks. I mean, the stock you buy, like of the business you're buying into the stock, that business could tank.
yeah,
Which I feel like, Buffett could bet. I mean,
yeah,
this is not his first time buying,
right, right,
securities. I mean, he's done that in his partnership and
yeah,
even before that.
yeah,
But the other is, what if there's a recession
yeah,
and now you do need the capex and now your stock is worth. I mean, that's I think the real risk, a macro risk where even Buffett's expertise is not going to help him out,
yeah,
and that's when he will need the money.
yep,
'Cause, I
yep,
mean, presumably, I mean, his business tanks. Like, what does he do then?
yeah, yeah,
Or a good buying opportunity appears. Like a business is selling that will make a great acquisition, but now his money is worth less.
yeah. But doesn't this kind of make you think that like all this stuff, if you were to kind of seep into his mind, you're like he's already thinking, hey, forget about this company. I just want to look forward, move on. I know this is bleeding, but I'm looking ahead.
Yeah, I think that's a good takeaway that he's already realizing that as a business, Berkshire Hathaway is a suboptimal thing, and
Yep,
he wants to find something better
yep,
that in terms of that will make him
yep,
more cash flow.
yep,
All right, we're almost done. Last part, dividends. This restoration of the company's financial position now permits a dividend policy reflecting the distribution to our stockholders of a reasonable proportion of current after-tax earnings. Such a policy, however, must be consistent with the need for preserving the strength of our present financial position. To implement this policy, a dividend of 10 cents per share was declared on November 14, 1966, payable to shareholders that had the shares on January 3rd, 1967. Or I mean, it doesn't matter. So
yep,
basically, they got I guess they were not paying dividends, and now they're offering this small dividend.
yeah.
They're not
Ten
giving a
cents.
big dividend because they want to hold on to the capital. They don't
Yep,
want to necessarily give it to the shareholders.
yep.
They like that buffer.
hmm You know what's interesting is that I didn't know this before, but so Berkshire Hathaway used to give dividends. They're famously known to not give out any dividends, but
Yeah,
interestingly, he's like I guess we need the shareholders right now, and we need people to invest in my company. So here's 10 cents per share. Yeah,
that is true. That
yeah,
is true. Yeah, he does give this dividend. I think, and this is Buffett starting a dividend policy because I mean he's trying to be I think he's trying to be just. He's
right.
trying to be just with the business. He's trying to be just to the shareholders. Because there's still a lot of uncertainty. He doesn't know if he's going to be able to buy a business,
hmm
if the way he's buying the common stock is going to grow.
hmm
And in the meantime, he doesn't want to necessarily keep his stockholders,
hmm
deprived of dividends. So,
hmm
and it's not, I mean, what stock is cost, what, $23
Right.
or
Yep.
$29 actually,
Yeah.
and it's giving 10 cents.
Oh wait, twenty
And
two
it's
dollars, right? $22
29
and
dollars,
76 cents.
I think in 1966,
So he's
28.
saying, because in that paragraph he was saying our working capital is now 22.76
Yeah, that's the
compared
working
to.
capital. But if
I
you go to
see.
the other, it says like the stock increased from $23.37 6 years ago to 28.99. So,
Okay.
but
Okay.
$29 and
Okay.
it's a 10%
hmm
dividend. I mean, that's like
Yeah,
0.5%,
that's right. Yep.
right?
Yep. Yeah.
I
But
mean, that's a very
per shareholder, so
per
really,
share.
yeah, per
Yeah, I
share.
mean, if
So
your shares were $29 and you get 10 cents for that
yeah,
share in
yeah,
a year,
yeah.
I mean, that is small. So he's still holding on to most of it,
Of the cash. Yep. Yep.
of the cash, and I don't know, maybe he'll kill that dividend and never give a dividend again in his life.
Yeah,
But
or I'm thinking maybe that was the norm. Every company that was listed at the time, they just have to give dividends. Otherwise,
yeah,
shareholders are like, "What the hell?" This is the concept of
probably.
like putting in all your money into back into the
Yeah.
business was probably unheard of at the time.
And
I'm
they
just
used
guessing.
to. I mean, they had all this dividend, right? They gave out $1.3 million in
Yeah.
dividend. I mean,
Right.
from the past 5 years. So I mean,
Yep.
and he probably doesn't know which direction for sure he's going to go.
That's
I
right.
think once he sees success in his acquisitions, then he probably realizes, wait a minute, the
Yeah.
best thing for the shareholder is that I don't give them the dividend,
Yep. Yep.
that I keep it and invest it on their behalf.
Right.
That will maximize their profits.
Right. So that he can do more than what he thinks the share. He can do a better job for the shareholders if he had the money instead of them having the
Yeah,
money. Yep.
but he doesn't, he doesn't go all in. He's like, yeah, let's just,
Yeah.
I want all the money. He's still like, here's a little bone.
Yeah.
Just look the other way while I try to do what I
Right. Right.
do.
Awesome. So it's 1966. Let me ask you the same question that I did last week, which was, do you think you would invest in the business now?
I mean, I don't think I would know what the business can do. I mean, it's still a textile business that's
Yeah.
giving a dividend. I mean, the only reason for me to invest would be Warren Buffett, knowing
Yeah.
the returns he can generate in the future.
Yeah.
Unless I knew about him, either through family or friends or directly about his capabilities,
Hmm.
it's really, I mean, I don't see a compelling reason to invest at this point.
Okay, so you think the business is still pretty crappy, but what wouldn't it convince you as a shareholder? You know, they're buying back shares. That's usually a positive sign that they're going to do something great with it, right?
Let me tell you this. If I was already a shareholder,
Yeah.
I'll be curious. I'm like, okay, this is interesting. Let's see where he's gonna go with this.
Mm-hmm. Mm-hmm. Yeah.
But I think if I was like screening and trying to figure out what stocks to buy,
Yeah.
unless I like knew about Buffett and was reading his letters, like there's no reason like
Yeah.
I would come across this and purchase it.
Yeah. I agree. I think I'd be the same way. I wouldn't buy it. Just be like, what the heck? This guy's gonna fail.
Yeah, like who does he think he is? Like this guy is like, manic. I mean, he thinks he's like, it's basically what Musk was probably feeling like. Oh yeah, buy Tesla stock. It's like 10 years ago, or
Exactly.
it's
Yeah.
like we'll go to the moon, literally.
Oh man. And you know what else would kind of scare me away from it is like in his shareholder letter, he's saying, "Hey, look, like before we had what was it, $21, and then now we're $26, or where did we read
Yeah,
that?
yeah, yeah,
Yeah, so
yes,
something like
yeah,
that."
something
And
like
I'm
that.
like, "Bro, you're not doing nothing with this company, man. Like I gave you 6 years to improve this company, and you're telling me you just made the stock price go up? Like this is ridiculous. I'm getting out."
That's still pretty good, man. I mean, that's still almost like 6-7% increase
Yeah,
in stock price. I mean,
That's
that's
yeah, that's right. Compared to the S&P 500, which we saw was pretty flat at the time.
so
Yeah,
that's why I think we need two different baselines
yeah,
to compare to. We need to figure out
that's right.
what S&P is doing, which it didn't do much
Yep,
from what we can tell.
yep,
And we need to have the baseline interest rate. Or like if you
yeah,
just bought a government bond, what was your rate of return then?
right.
That way
Yeah,
we can make more sense. And
yep,
Buffett has a rule that he has a benchmark, right? That
mhm,
he wants to, well, he wants to make absolutely greatest gains.
yeah,
But when he invests, he compares, like if I make an investment, what is my expected rate of return, and how does that compare to the risk-free return, which is the bond, the government bond.
yeah,
And I read somewhere that if the government bond rate of return is less than 6%,
hmm,
which has been for the past what, like 10, 15 years. I
yep,
don't think the last time it was more than 6%. At least 6 to 10, 5. It may have been longer than that.
hmm,
Buffett assumed the risk free rate was 6%.
yeah,
So he always tried to do more than 6%.
yeah,
And
right,
that's how his partnership was structured, right? It was like 6 point or maybe a quarter percent,
right.
like he would guarantee, and only then he would start taking fees.
That's right. So
Like
right
like
now, I guess he's not taking fees. If that's, I mean, I think you're accurate in saying that. So right now he's not taking fees because he hasn't beaten that 6% mark, and he hasn't been for
well,
6 years.
this is not a partnership structure. This is the business. So
Oh,
he
that's
doesn't
right.
get
That's right.
anybody.
Yeah, he's like way before. Yeah, that's right.
There
Okay.
are no fees. I think
Okay.
he had a salary. So I mean, the only way he got paid was, I think Buffett has $100,000 salary, yearly salary.
Yeah, but
I
this
don't know
was
if this was
after the
started.
partnership, right? Before he.
Yeah, with Berkshire Hathaway,
Oh, I see. Okay.
Buffett only way Buffett made money
Okay.
other than stock ownership. He owned a lot of stock,
Mm.
right, majority holder,
Yeah.
as he changed the leadership.
Yeah.
So he's a majority stakeholder,
Yeah.
and then I think he gets about $100,000 a year
I see.
from the profits
Okay.
as his salary,
Okay. Mm.
and that amount has not changed
Yep.
ever.
Yep. Wow. That is incredible. Wow. I would not do that if I was him.
I'm like, I need a pay raise. And wait, who do I ask? No, I ask myself. I get a pay raise. Yes.
The perfect CEO. This is great, man. I had a lot of fun with this one. So next week,
Yeah.
1967.
Built in 19. Oh, I think it may be 1960. Yeah, 1967.
Yeah.
I think they released the letter in March 8th, 1968.
Yeah.
But yes, that will call 1967. Oh my
Awesome.
God. It was so good. I think I have to read these like 10 times to actually understand
Incredible. It was
what
so
all
great.
this stuff.
I loved this one. Um,
Beautiful, beautiful.
okay, until next time.
All right, until next time.